What is algo trading?
It is the natural evolution of trading. I see years down the lane, almost everybody who's getting into trading will be doing algo trading.
Tweaking one small thing in all of these steps will change the whole outcome of the strategy even.
There are 3 different ways to start algo trading. DIY, with code, without code. Then there is a third option.
Trades will automatically get placed at your broker. Trade entries will be done automatically. Trade modifications will be done automatically. And trade exits will also be done automatically. This is the best way to do algo trading for beginners.
So can a person with zero stock market trading knowledge become a good algo trader?
You need 3 things for your algo trading system. 1 is your systematic strategy. Number 2 is automated execution. Number 3 is continuous monitoring and optimization of the strategy.
Being a non-technical person, I feel there is some level of coding that is required to even get started into this.
That is where these platforms are getting very popular. You can play around with them and create systematic trading strategies.
2 platforms from which you can easily get access to live and historic data. One is AccelPix, the other is True Data. I think investors would be really happy this week. The market showing a lot of positive signs, a lot of bullishness. Nifty moving up by more than 850 points just this week. And I think a lot more good things are yet to come.
Very true. Nifty is just looking like it's on steroids and the bulls are back.
So on Twitter, there were 2 kinds of people. The investors who were very happy, but then the traders who had short positions and then they got in trouble.
Yeah,
So
very true. Even I was seeing because everybody thought this was just a retracement. I saw a lot of call away also getting built up.
Yeah. So, I was watching this, observing this. That's when I got the topic that we should discuss about this week. As a trader myself, I was not at all worried about what all happened in the markets last week because the markets could have gone up. People have made short positions. Even I would have made short positions, but I did not have to worry about a single thing because I had invested, or I am a pure algo-based trader right now. So I understood that there are a lot of benefits, a lot of merits around it. And I wanted to host a very unbiased, a very educational episode for all of our viewers here in the Aftermarket Podcast. And yes, it is the 18th episode of the Aftermarket Podcast. And we'll be discussing algo trading in India, especially for beginners today. So let's introduce a host here. The 18th episode of the Aftermarket Podcast. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
So every week we sit and decide what is going to be a topic that will give the maximum value to our audience. We go through the comments, we go through a lot of interesting stuff that is happening in the market. And the most asked question in the last 17 episodes, if you're looking at it, was, what do you guys do? What is this strategy performance that you talk about every week? What is this profits that you talk about every week? We want to learn more about that.
Exactly. Algo trading as a word is really in the buzz today. And also the fact that regulations or formalizing of the industry and the ecosystem is happening. On April 1st, NSE is going to come out with what all are expected from people who are doing algo trading. And from August 1st, it's going to be a completely formalized industry. So interesting times coming up ahead. And because the word is buzzing everywhere, a lot of people are now trying to get into algo trading, wanting to know more about algo trading. So let's do it. Super excited.
So let's try to give a lot of value in today's episode, especially to all the beginners who are watching. So I know a discretionary trader who's watching, who's facing troubles with finding the right disciplined approach towards trading, who is not having the time to trade. Maybe someone who hasn't figured out a strategy or a trading psychology just yet. For all of them, this is going to be the perfect episode. So I think let's start with, what is algo trading?
So let's break down what this algo trading is even. So it is also called as algorithmic trading, where you have a predefined rules, then you give it to a system and it executes in a flawless manner, in a very efficient way, which a human may not be possible to do in that efficiency and that speed. So simply that is called an algo trading.
So imagine how a lot of people are trading today. So they sit at 9:15 in front of the system, they watch every single chart, they open the multi-chart windows and they decide, okay, this stock looks good or this option looks good. Maybe I should take a trade in it. Then they go search for the symbol. Then they decide, okay, I should buy or sell this option. And then they manually execute it, they watch the trade, and then they decide, okay, I should now exit it.
Yeah, no, they also look at the chart, draw some 100 lines on it, put some 50 indicators, then take the decision of, hey, let me buy this or sell this. So they go through this complex process and then they actually place the trade manually, which if you think about it is a series of inefficiencies, a series of human gut-based thinking coming in. The person has to sit there and judge and take calls and take bets and then execute them, which is a laborious manual process, which is prone to a lot of inefficiencies by definition. And that is where the beautiful world of algo trading is coming in, right? And I'm personally super excited for today's episode because, hey, this is one of the episodes where I did not need any preparation because we've been doing this for the last 2.5 years. I mean, I've been living algo trading, automated trading for the last 2.5 years, and I'm super excited to speak about a lot of things here. But I really want to break this down better as well. Let me use an example so that we can understand this even better. So there is this famous golden moving average golden crossover strategy, right? Which says that if the 50 moving average crosses above the 200 moving average, then it is bullish and it is a good time to buy. And just the opposite, when the 50 moving average crosses below the 200 moving average, then things have turned bearish and it is a time to sell. Now, this is a theory which I hope a lot of us have heard. I hope the viewers have also heard this theory a lot. A lot of YouTube videos are also available out there. And based on this, I know traders who look at the chart, see if the 50 moving average has crossed the 200 moving average, and then try to buy at the right that same amount of at the same time to make that gain. But if you think about it, the entire process can be made much better if you're if you're converting this into an algorithm and ask the algorithm to trade for yourself. So what you can do is you can write a computer code, a program which converts this into a strategy, and also it not just executes for you, it also tries to backtest this for you. It will tell over the last 5 years, if you were to use this logic to buy and sell an instrument, say NIFTY for that matter, how much profit you would have made. And if it was making profits, then you can ask the same computer algorithm, hey, replicate this for me in the live market. Whenever this moving average crossover happens, buy for me, the vice versa, sell for me, and the computer will do it automatically for you. So you understand how many inefficiencies have gone away. Computer has taken it away for you, and that I think is the beauty of algo trading.
And even talking about the natural evolution of trading, I think in Scam 1992, a lot of us got a glimpse into how the Bombay Stock Exchange worked back in the day. So there was a ring of traders, and it was a very physical process where people had to raise their hands, they had to shout, they had symbols to show how much they were buying and selling. From that world, right, we moved into what? We moved into a call and trade world where people could call from their home. They could tell, hey, my broker, buy or sell this share. Then eventually we moved into computer-based or internet-based trading where you could sit at home, type on your computer and buy. And now today we are buying and selling shares and options, everything from our mobile. It's such a easy, convenient world that we live in. And the next possible or the next logical evolution is algo trading, where there is no action from an individual side. It is all systems and logics taking care of the trades.
Exactly. So that's what I keep telling to people, that it is no rocket science. It's just the naturally evolved form of trading, where rather than you using your brains to trade, you're using your brains to create good algorithms. And those algorithms will trade effectively for you, and by which your probability of making profits will definitely increase. And it's just natural evolution of trading, no rocket science, nothing to be worried about. Algo trading, as the word is slightly complex, people think it is difficult to get into, it is out of reach. Not the case. I believe, again, I know I'm risking repetitiveness here, but again, it is the natural evolution of trading. I see years down the line, almost everybody who's getting into trading will be doing algo trading.
So let's start even with the basic question, like why did we even transition into algo world? So what are like the major advantages which forced us or made us move into the algo trading world? Maybe we should even talk about that.
Yeah, man, memories, a lot of memories kicking in. I mean, given the fact that I started trading back in 2017. So like everyone else, early days were absolutely sitting in front of the system, looking at charts, trying to figure out and taking trades ourselves. And for a lot of years, we did that. We did that together. We sat and traded a lot. And then, we made the shift into algo trading. Multiple reasons. I would say 4 reasons specifically for me to convert from a discretionary trader into an algo trader. Number 1 being the ability to diversify without breaking my head.
Yep.
So earlier, when I was trading with still a sizable capital, all my capital was going into a single trading strategy.
Yep.
Why? Because it is me sitting in front of my system and trading. So I cannot like have multiple different trading strategies to be controlled personally by me by using my brain sitting in front of the system. When I got into algo trading, so there are multiple strategies which I've coded, which are all trading simultaneously on multiple chunks of my capital. So my capital is getting multiple strategy diversification today, which I don't think was possible in a manual trading world.
Yeah.
Number two is scale. Now that I can have diversification of strategies for my capital, I can scale my capital easily. I can scale operations easily for my trading. So that was number two. Number three was it turned passive.
Correct.
I mean, earlier, I remember back in the days we used to trade, and even to take a bathroom break
Yeah.
at times was very difficult. Even if we were getting a call or if you wanted to do something, during expiry days, when things were intense, we were sitting in front of the system with a lot of adrenaline rush.
I mean, if you had a smartwatch, you can see your heart rate going
Yeah,
up.
I remember one of our colleagues, and I'll take his name as well, right? Abdul, back in the days, he used to wear Apple Watch all the time. He used to show
Yeah.
after the day that, hey, how much time it was peak and staying at the peak.
9:15 to 3:30, you can see it's always at peak.
I'm not really saying that algo trading is magical and you don't have to feel tense on there's no adrenaline rush. I'm just saying it is much lower,
Yeah.
lesser compared to manual trading. It's
Correct.
peace of mind is slightly better.
Technically giving you a lot of peace of mind.
Exactly, that's the fourth point. Peace of mind, some peace of mind, better peace of mind compared to manual trading.
Yeah, even when I look back, when I was trading, even when I was, I have Shiro, I have to take him out for walk and all. I used to constantly look at my phone, keep the watch list ready, all the strikes and premiums, seeing where would it move, how much it would. You're constantly looking at it, and you're always tense. So, getting that out of your life, getting less screen time is very much peaceful right now.
At the end of the day, there is also this saying that health is wealth, and I think health-wise things have gotten better with algo trading for sure for me.
Yeah, I know that we are talking about option trading and us specific here, but if you actually take a step back and in a broader sense, if you look in where does this algo trading or algorithms are even used, if you look at everywhere it exists, even in Forex market, commodities, crypto, even in equity markets also they exist, hedge funds use it. Everywhere it has been in the market, they have been using it a lot, but right now it has come down to the retail level is what I would say.
And in retail, most people prefer to trade in FNO,
Yeah.
right? So just like us, and we have seen a lot of people, right? Us being in the scenario to talk and interact with a lot of people, we see that most algo traders today, especially in retail, they prefer going the futures and options route, and especially right now they're trading in NIFTY. And the infamous Jane Street news that also came out, where they are also making billions of dollars from the Indian options market, and I'm sure that it is also from the algorithmic trading that they're doing.
Yeah, obviously, why not? Now, India is like the capital of option trading or future trading. Derivative capital is what they call us, right? So, obviously, that is what we should see.
And because of that reason, there is a liquidity or the bandwagon effect which is going on. Because everyone is in FNO, then the new people also come in, they are also going into FNO trading or FNO algorithmic trading. So that's why, like you said, even though anyone can start algo trading in equity, Forex, commodities, anything, most people today, when they hear about algo trading, they're talking about NIFTY options trading.
Yeah.
Let's be real.
Yeah, absolutely. And someone who's watching this video or even listening to it in an audio form would be very curious, right? Like, how does even an algo trading work?
You need three things for your algo trading system. One is your systematic strategy. That has to be ready. Number two is automated execution in your broker. Number three is continuous monitoring and optimization of the strategy. All three put together is what, in our context, algo trading is. So I'll go to number one, which is systematic strategy creation. So it's a systematic strategy, which means that there are rules to the strategy and it is backtested with data and with performance metrics. You're sure that it is a good strategy.
So that means there is no gut feeling involved. There should be a predefined specific rules for a particular strategy.
Yeah, so maybe I'll speak about what systematic strategy creation is. So it all starts from a hypothesis. Maybe I'll take the example I was talking about before, right? A 50 moving average crossing above the 200 moving average, it could indicate bullishness and it could give profits if you go long. It's a hypothesis.
It could be a gut feeling.
Yeah, it is
could
a
be-
hypothesis
yeah.
because someone observed the market multiple times that whenever 50 moving average is crossing above 200 moving average, it is going up.
Yeah.
So it is now a hypothesis. What is hypothesis? It is nothing but a intelligent gut feeling of sorts.
Yeah.
Now you have to validate the hypothesis. That's
Yeah.
number two. So if you are to create a strategy, it starts from a hypothesis. You write down that, hey, I saw multiple times that whenever 50 moving, again, the same example, 50 moving average is crossing above 200 moving average. It is nice. It looks like it is a good long buy opportunity. your hypothesis. Now you take the hypothesis and you code it and you put it on market data. For example, let's say Nifty is where we want to take this trade. So now you say from 2015 or for the last 10 years. So 2015 till 2025, say in a 5-minute time frame or whichever time frame you want to backtest your strategy on, whenever this happened, you wanted to go long on Nifty and then you ask system to give you a simulated trades of the past, which is what is the backtest is, you'll get to see if it made profits or not. Now, if it made profits in the backtest, it is a good strategy. Now, profit is just one example. When you are professionally backtesting, you have to look into multiple other performance metrics like maximum drawdown.
Yeah.
What is your win rate? What is the average profit you make during your wins? Average loss you make in your losses? What is your Sharpe ratio, Sortino ratio, Kalmar ratio? There are a lot of metrics in the professional world with which you can judge if your hypothesis is actually converting into a good trading strategy. Once you have a strategy converted from a hypothesis, which is giving you great performance metrics, that is where you have a good strategy to trade.
Yeah, and even I'm sure tweaking one small thing in all of these steps will change the whole outcome of the strategy even.
Absolutely. So now what we took is a very simple example.
Yeah.
I mean, no strategy can be as simple as what we just said. A strategy has a lot of moving parts to it. So you have to go through the process. And finally, what happens here is you're validating your hypothesis.
Yeah.
Correct? You started with an idea, a gut feeling. Now you validate it with data, with simulated trades over the past data, which is what your backtest is, and that is a beautiful process of validating a strategy, validating a hypothesis, creating a strategy. Now what you have with you is a systematic strategy. Now if you start trading it in the live market, whenever it is happening, whenever the rules of the strategies are happening, you have to trade as per that, and you can expect what the kind of returns you saw in the backtest, something similar to that you can expect in the forward real market. And why is it so? Because markets tend to follow the same patterns over time. So because market tends to follow similar patterns, whatever you saw in the past backtest, you can slightly expect similar performance in the future. This is what a systematic strategy creation is.
So we talked about a lot of ratios, Kalmar ratio, Sharpe ratio, max drawdown, and a lot of metrics. So I promise you value. So I'll be attaching a link in the description with a very detailed article where you can go through every single one of these ratios, understand what they mean, and understand how you can start looking at them in an angle of a algo trader.
Yeah, absolutely. And then coming back to Sharik, so you explained how to, create a hypothesis and then validate that hypothesis. But then, okay, now we have a great strategy, which is giving me amazing results and potentially, giving us good results also. Then how do we deploy it in life? What should be the next step?
So that is where the automated execution, the next step comes in. So strategies, as we discussed, wouldn't be as simple as a moving average crossover. There will be a lot of moving parts to it.
Yeah.
Maybe you have to sell call options and exit a put option, and maybe you'll have to look at multiple indicators to decide the trade. So you as a human, you just cannot do it manually. If the strategy is good enough, if it has a lot of moving parts, you cannot trade it manually, and that is where automated execution comes in. Now, because the computer, the algorithm knows the rules of the strategy, rather than looking at past data, you start putting in real-time data into the same system, so that based on the real-time data, it calculates all the indicators, all the rules which are necessary, and start giving you real-time trade signals. And it just does not give you real-time trade signals. It will execute the trade as per the signal on your broker as well. And for that, you have to connect your broker APIs into your system, into your signal generation system, as we call it here at marketfeed. So when you connect your broker's APIs, the system will send the trades via your broker's API into your broker, and the trades will automatically get placed at your broker. Trade entries will be done automatically, trade modifications will be done automatically, and trade exits will also be done automatically. And all you have to do is, which is step number 3, monitor this so that there are no errors. If there are errors, because it's a computer driven program, there could be errors from time to time for whatever reasons. So if there are errors, you have to monitor and correct if necessary, or you have to build systems so that it automatically corrects whatever is wrong. So that is step number 3. Finally, we are coming into, so it shouldn't be the case where your computer is trading for you.
Yeah.
You should be responsible enough to make sure there is nothing breaking in the live market. And also at the end of every day, at the end of every week, you also have to see if your strategy is still making sense.
Yeah.
That's the optimization part. Maybe your strategy could deteriorate over time, or you will always find, hey, if my strategy, if I do this, what if it gets better?
Yeah.
So you have to keep that curious hat on, and you have to always think about how can I make my strategy better. And that is the optimization part because you're monitoring the market always anyways.
Yeah, I understand all of this, but there is one question that is still holding me. So I have a hypothesis. I understand that it works, then I coded it. But I'm not sure if the code is going to work. I'm not sure if it is going to, not send any wrong orders, which I might get my strategy into trouble. So how do I validate that? Or is there any testing phase that happens?
There's something called as forward testing, which means that whatever strategy is in place using your automated execution, you just like forward test it, which is virtually trade your strategy,
Yeah.
even without putting any money into it. That's number one.
Yeah.
So number one, you can virtually trade the strategy in live market to see that your signal generation system is creating signals which is in place with the rules of the strategy.
Yeah.
How do you validate that? Say if it is an intraday strategy, you let your signal generation system create signals for a day. At the end of the day, you do backtest for the same day.
Yeah.
And see if your backtest and your live generated signals are matching.
Yeah.
This itself means that your system is working right. Now, if this is working nice, what you can now do is connect one of your real accounts and trade that account for again a day.
Yeah.
And see if execution is also happening nicely.
correct.
If there are any errors there. If nothing of this is happening, hey, all your systems are perfect, you can go ahead, you can start trading.
So when I'm hearing all of this, like being a non-technical person, I feel there is some level of coding that is required. There is some sort of tools or some fancy stuff that I have to do to even get started into this. And maybe someone who doesn't have all of knowledge of this, I could be very intimidated even by even thinking of how do I even start.
Yeah,
So is there any simpler
why,
ways?
Yeah, this is why people think it's rocket science. There's a lot of coding and computer science and programming and hey, I don't know all this. How do I get into algo trading? So your concern is real.
Yes, what you guys were discussing is true. There are 3 different ways to start algo trading. And the first way is definitely you understanding and writing the code yourself. So I call it DIY trading, where do it yourself trading, where I think it's the best way, but definitely the hardest way, where you sit, you write your own codes, and then you decide, hey, all of the components that Sharik talked about, you decide to design it yourself. Okay. And yes, we can discuss few tools, few public libraries here that you can use, which will make your life simple.
That means you have to be an engineer or you have to learn programming or coding yourself and do all of this yourself. But yeah, that's the best way to do. That's the most flexible way to do because whatever thoughts are there in your mind, you can make a code or a logic out of it or an algorithm out of it and you can start trading.
And for this, Python is the most preferred coding language that backtesters or algo traders go for here. And there are a lot of open source Python libraries available for things to be much more easy for you. So one is the TA-lib, right? Which is the technical analysis library that you can refer to. A lot of technical analysis indicators are inside that library. Your life is a lot easier there. Then 2, you can use a library which is called as Backtrader. Again, makes your life a lot more easy. Trust me, guys, I'll show a lot more here on the screen if possible, but these 2 will change your life.
But again, I'm sure for me to even test this, I would need a lot of data, right? I would need, some data to backtest. So where would I get the data from?
So to get both live and historic data, you have a lot of ways. So I'll talk about 2 platforms where from which you can easily get access to live and historic data. No form of endorsements in any of our discussions here. So one is AxelPix, the other is True Data. I know, yes, they have a monthly or a yearly subscription fee. If you pay that, you get access to all of their data. And obviously, you can go through your broker as well. A lot of brokers are nowadays giving through their APIs, they are giving live market as well as historic data that will help you backtest and even deploy your algo trading strategies.
And when it comes to execution also, someone will have to code high-performing, very fast execution engines so that all the signals can be executed with precision very fast at your brokers. And that requires coding in other languages like C++ or even we at MarketFeed, we use Golang to write execution engines. But that's where recently I saw a very interesting open source platform. Again, no endorsements here. It's called openalgo.in. So openalgo is a platform where you as an individual trader, you can go and use that as a platform as your execution engine, and it will take your Python codes to create signals. So that's very interesting. If someone's do-it-yourself algo trader want to really build their own system, they can take a look at OpenAlgo.
Yeah, I think that's the most difficult route to go in. We have established and talked about a lot of tools that people can use to start in the DIY route. Now, I think there's a slightly more easier route. I still call it no code DIY. So let's discuss about that.
Yeah, so no code, do it yourself platform. So I think in a lot of different industries, these no code platforms are coming, and it makes a lot of sense. Everyone's not really tech savvy, everyone is not a programmer, engineer themselves. So even traders who do not know engineering and coding and programming, but they have trading knowledge, they also want to get into algo trading, and that is where these platforms are getting very popular. Popular names like Tradetron, Algo Test. So these are full stack end-to-end platforms. You go to a Tradetron or an Algo Test, there are no code tools available there. You can play around with them and create systematic trading strategies.
You can backtest, you can forward test.
Yep. You can do all of those, and these come with their own execution platforms as well. You can go to your broker, take your API key and secret, come and plug it into these platforms, and these platforms, the same backtested strategies you developed, they in the real market will start trading in your account. All of these are being able to be done today using platforms like this. Very, very interesting.
So DIY with code and DIY without code. Yeah, very straightforward.
Yeah, so I see a lot of people today. So the larger part of retail algo trading today is happening using platforms like this. I'll just add a few more names. Quantman is another platform, again, end-to-end. You can backtest, you can take it to real trading as well. And then there is a very famous Stockmoke as well. But with Stockmoke, you can only backtest your strategies. Stockmoke still does not support live trading yet. But yeah, I see when I look into Twitter, or I go to events and meet people, I see a lot of people using such platforms where coding is not needed and create strategies and start trading them.
Then there is a third option, which is subscribing to algo trading strategies. This is, in a way, fully passive. So there are algo trades or algo ready trading strategies that are developed by very knowledgeable traders, or in marketfeed's case, yes, we are in the third category, SEBI registered research analysts. And these strategies can be automated in your own trading account. This is a third category. I think we should discuss about that as well.
Yeah, I think this is the best way to do algo trading for beginners, right? Where ready-made algo trading strategies are available, and these strategies are made by experts who have years of experience, backtested across years, fine-tuned to precision, and which are also executed in people's accounts with high efficiency execution engines. And this is the third kind of way to get into algo trading, right? Where strategies are available. All people have to do is go subscribe to these trading strategies, and these trading strategies will start running in one's account in a fully automated manner. And as Ajay said, this is what marketfeed does.
Yes, and today there are thousands of people who are trading with us, and more than 250 crore rupees being traded in the markets every week.
Absolutely. And when I hear about this, for absolute beginner, marketfeed is the go-to option that I understand, which is the simplest, easiest, and most efficient way. But again, somebody who wants to take the first and second option, which is DIY route, they have to still understand that the strategies or the logics that they are building is not just plain vanilla. They have to understand how market functions. What they should have a fundamental knowledge. They have to have a technical knowledge. They have to understand how this whole structure and things work also, and then they have to design their own strategies. So that is much more complicated, and that is where we come in with much more ease. And the best product for trading is what I would say.
So for all of them who are now really interested in marketfeed, they can go. The link is available in the description. Go check us out and get more information from our website and mobile app.
So can a person with zero stock market trading knowledge become a good algo trader?
So the straight answer is no. You have to have a lot of context and understanding on the fundamentals, the technical aspects of how a stock market works, or how a option premium works, or how the strategies itself work, right? You have to have all that context, understand, do your homework, and then try to get into all the systems, either 1, 2, 3, whatever it is. You need to have that predefined knowledge and then get into the algo trading. And once again, I'm repeating, algo trading or the automated trading that you think, or when people hear it from outside, they think it like a money making machine. You just put in money and you will make a lot of money. That is not how it works. There is a lot of back end stuff that you have to do. You have to prepare yourself mentally also, and then get into this.
Yeah, I think the important point to note here is that the world is moving towards algo. So learn the basics, understand everything that you need to know about the market, then get into algo trading. That is how the reality of the market is going to be.
Absolutely. And extending to this, some people with very less or a limited capital, let's say 5,000, 10,000, 15,000, they think that they can also get into algo trading without understanding the future costs or expenses that are involved. They might start thinking, okay, I have 10,000, I'll start algo trading from tomorrow. That is not how it works. There is a lot of costs involved, and somebody who treats this as an actual business income only, I strongly recommend they should only get into. And I would say somewhere, your starting capital should be 50,000 to at least 1 lakh to even start thinking of algo trading.
All of the platforms and services Sharik talked about earlier, they come with their own costs. Let's take the case of Zerodha, who charges rupees 2,000 per month for their API access.
Yeah.
No other broker does it, only Zerodha does it. But let's take even all the other platforms that you talked about for backtesting or for strategy execution. They also come with a nominal cost. So let's take an average of 3,000 rupees per month as your cost.
Yeah.
So if you're trading with a capital of 1 lakh rupees, that is nearly 3% of your capital.
Yeah.
I think it's huge, right? So even if you hit a ROA of 3% per month, the charges for just these platforms will eat into your profit.
And then comes brokerage on top of all these, and that's where I'm completely aligned to the fact that you need multiple lakhs of rupees of capital to do this meaningfully, to really see returns which could create a meaningful impact in your life.
Yeah, because even though you increase or scale your capital to multiple lakhs, the cost stays constant. So your technical expense is much lower than compared to your initial cost.
Yeah, I think that's where we should discuss what are the common mistakes that retail traders make when they get into algo trading.
See, the very first most common mistake I see is in the world of backtesting. So number one is people expect exact backtest results in live trading, which will never happen. We spoke about this, right? Backtest, yes, it is done over past data, and there is an expectation that market patterns would keep on happening. But then there are points that people overlook, like slippage.
Yeah.
So slippage is not getting captured really nicely in a backtest. So when you're live trading, slippage comes. So you cannot absolutely expect 100% adherence to your backtest results when you're live trading.
Yeah.
There will be some slippage and charges and all of those will come. And by means of which your live trade results will slightly vary from backtest. So you'll have to understand that. Number two is the backtesting discipline in itself. For example, when you're backtesting, I've seen people trying to move parameters and configurations here and there to get the best backtest.
Yeah.
But the best backtest would be a fitted backtest. So there is this concept called overfitting or curve fitting in the discipline of backtesting, which people tend to do. So here what would have happened is, because you have access to all the past market and past data, you would have just figured out the best possible configuration.
That particular instance, and then they try to tweak around the systems to get the best one, and probably it might not be the great thing always.
Exactly. The exact same thing you might never be even able to replicate. So basically the point of overfitting and curve fitting is also something I see happening a lot with beginners.
Yeah, so hyper optimization is what we can maybe call it.
Correct. Yeah.
And one more major thing I see in the new age algo traders is lack of discipline. The whole point of getting into algo trading was to cut down emotions, cut down discretion, and follow the rules exactly without looking at the screen. But what people do it, they run an algo, the trades keep happening, and they keep watching the screen again.
Yeah.
And then they see like, okay, I see that something could happen. I should exit or I should take an entry. Why is my algo not taking it? I should intervene. And they manually intervene, they screw it, and then they regret it. That is the major concern I see in this new age algo traders.
Yeah. So that's where that's one point which I'll say that, hey, I've also done that. Early in the days when I was also making my shift to algo trading, even I couldn't just sit there, trust the system, trust the backtested system to take actions. I'm like, hey, it is already at good profits. Now I'm taking my gut-based call that market could reverse from here. Let me exit.
Yeah.
And I would just exit. But maybe if I would have let the system would have done better and given me higher profits.
Yeah, we saw that over a cumulative time period, us not taking those actions would have been better.
Absolutely.
Maybe 1-2 instances it happened well and we go into a survivorship bias, right?
Yeah.
Hey, this good thing happened. Now, next time also I should do it.
Correct.
But over a long term, we observed that is not the case.
Yeah. But if it was the other case, if someone did that and if they see that whenever they are intervening manually using their discretion, and if it is giving them better results,
Yeah.
it means that they should make their system better.
Correct.
They should use that intelligence of theirs, and they should make their system better, so that system in itself can take care of or incorporate their intelligence into the market.
They should go back and change the rule and change the whole code and add it into the code.
Exactly. So remember when I was talking about the steps in algo trading, the last point, which is continuous monitoring and optimization, this is the optimization part. So if
Yeah.
you can bring your market intelligence and your knowledge, bake it into the strategy, make the strategy better, and let it run in itself.
Yeah, and before wrapping, we should also talk about regulations around algo trading. So there have been talks from the SEBI, and there were so many circulars and discussions around this. And now things are actually moving fast. And from August 1st is where the actual circular is also coming into effect. So maybe we should even discuss very quickly what are the regulations that are coming into algo world.
So algo trading in India is getting formalized. As you said, August 1 is going to be the date. And let's talk only for retailers here,
Yeah.
right? So two major things are going to happen. The first thing is that the open APIs, again, the term is a bit broad here, but open APIs are going to be banned. That means your interaction with the broker to get the open your APIs is going to get a bit more difficult. We don't know exactly how it is going to be. Let's wait for a few more months to understand. And two, currently the rules say that even as an individual investor, you'll need to register your algo with the exchange if your algo or you are firing more than a certain threshold of orders.
Yeah.
That means if you're very active, your algo is very active and you're firing a lot of orders, you'll need to get it approved by your broker with the exchange. So yes, the world is getting formalized. A lot more clarity will come on April 1st when NSE will put out the circular. Make sure you watch that very closely, hoping it will be in very simple language, unlike SEBI circulars. But April 1st, the date to watch out for the rules that are going to come in. August 1st is when it is going to be implemented.
Yeah, so I think the second point is creating panic among retail traders, right? The fact that, hey, some time I might have to take my strategy and get it approved. But again, for all practical reasons, I don't think that's going to happen, because that threshold they're going to talk about is going to be thousands of orders in a second or something like that, which I don't think in any practical case, no normal retailer would have a strategy like that. So I think retail traders need not worry about taking their strategy for registration of sorts. It's just the fact that, hey, how do you get the APIs? Are there any restrictions there? Most probably it wouldn't also be very, very strict or difficult. But if that's the case, hey, things could be pretty easy for retail traders if they are to create or trade strategies of their own. And also speaking about algo providers like us, now that is what SEBI and NSE are calling platforms like marketfeed. Marketfeed will be recognized as a empaneled algo provider where SEBI research analysts can create algos which are called black box algos, because rules are not available to the public. But hey, we can create strategies which are available for public, and our strategies will have to be submitted to the exchange. We should get approval for our strategies, and then we can offer our strategies to the public. The world is going to be super amazing, beautiful, is what I think.
Absolutely. And just like how, there is this thing running around, if you're not using AI tools, you will be left behind and probably you lose your job. In the similar way, the new age traders who are not getting into algo trading might be left out, and, you're missing out. So I think everybody should, just like how you're now adapting to AI software tools and etc., you have to get into algo trading as well.
Yeah, when it is getting more difficult to get an edge in the market,
Yeah.
I think algo trading can be your edge
Absolutely.
for some time, but then you'll need to keep on optimizing it. It's not going to be an easy world out there. But yes, that's where we'll wrap up today's show, the 18th episode of the Aftermarket Podcast. I think a lot of value being
Yeah.
given. I think to a person who just saw 920 straddle on a Twitter, them coming here, I think they would have gotten a lot of value.
Absolutely.
Practical advices, platforms, and methodologies to start thinking about how you can start algo trading.
And even the costs involved.
Yeah. So that's where let's wrap up the show. Make sure you are a very active fourth participant here and let us know in the comments down below any and all of your thoughts. Yes, we are reading all of your comments, both the good ones and the bad ones. Yes, we understand the format has slightly changed. The discussion parameters, yes, we have to improve, but please do let us know in the comments down below. We are trying to get better every week, and we'll make sure that we come next week with an even more better episode. This is Ajay signing off. See you. Bye-bye.
Bye.
Bye.